Hello, everybody. Tony here. Last week finished with the Nasdaq hitting a fresh record high, while both the S&P 500 and the Dow Jones took a breather ahead of this week's eagerly anticipated Federal Reserve meeting. In late August at Jackson Hole, Fed Chair Powell pivoted dovishly and noted that the risks of a labour market slowdown was now considered a more significant risk than persistent inflation. Soft labour market data and last week's BLS revisions have only reinforced that view. As such, the Fed is expected to cut rates by 25 basis points this week to deliver its first rate cut in 9 months. Let's take a look at the charts of the S&P 500 and the Nasdaq as we start this new week. Today, I want to start with the daily chart in the Nasdaq. And what you can see here is that we hit those fresh record highs, which within our Elliott wave preferred framework is what we would consider to be a wave 5. You can see your 1, 2, this is your wave 3. The wave 4 low finished here in early September, and we now have a wave 5 underway. The minimum requirement for a wave 5 is in. However, what is going to be very important is whether it can break above this weekly trend channel resistance we've been watching for quite some time post Thursday's FOMC meeting. And if it can sustain or even close on a weekly basis above here, it probably opens the way for the Nasdaq to push up towards 25,000. Now, if for whatever reason it backs off from here, then you're probably starting to think, well, okay, we've had this minimum requirement in place and we're going to see a pullback after this 5-wave advance. Now, the pullback probably would be expected to come back into this area initially, 22,900-ish, with scope towards 22,000. Of course, below here, we have the 200-day moving average at 21,437. Now, for the S&P 500, what you can actually see is that new high last week at 6,600 has seen it break above this trend channel resistance. This is probably a bullish sign overall for the market, but it hasn't been confirmed by the Nasdaq. So we are still watching it very, very closely. In terms of the daily price action, you can see now that we probably have, well, we have now got this wave 5 up in place or extending after this wave 4 pullback, which we saw through mid-August into the early part of September. So here's your wave 4. You've got your wave 1, your wave 2. This was an extending wave 3. And then your consolidation for wave 4. Now, again, the minimum requirement is in place. We really want to see both the S&P 500 and the Nasdaq confirm if it is going to really push higher. It needs to do them. They both need to confirm the break higher on the weekly charts, and that won't come until after Thursday's FOMC meeting. So, all eyes as we follow the FOMC meeting on these weekly levels. And if they can confirm that break higher, it looks like the bull market can extend further into year end. Thanks for listening and have a great week ahead.